What's up guys, I'm back like I never left. In this video we are going to be talking about the major catalysts that can significantly affect the stock market for the next few days, the next few weeks to come. We're going to go over exactly the top stocks to be watching out for the next few days, for the next few weeks that could potentially be going higher and breaking out to the upside. So I'm going to cover the important catalysts, what are the top stocks that we need to be watching out for, and also some important economic reports that can affect the stock market in the short term. So make sure you stay tuned. Now let's get right into the video. Now, I really appreciate it if you guys can hit the like button. If you have any questions, any comments, make sure you drop it in the comment section below. So the first catalyst that can affect the stock market in the short term, and that is going to significantly boost it to the upside, is going to be the stimulus package. So the deal has been reached and they're going to be voting on Monday. So that is fantastic to look at. So we definitely can expect that the stock market can definitely be going higher and higher, and we could potentially end 2020 with a fantastic rally and breakout to the upside in the stock market. So definitely be on the lookout for that. Later on, of course, I'm going to be talking about some important companies that we need to be watching out for moving forward. And the other important news that came out that can significantly affect the stock market, specifically on these Chinese EV companies, is that Trump finally signed the bill. So we talked about this delisting bill that is going to basically provide restrictions on Chinese companies if they do not comply with US accounting regulations, so that is really massive. So we're looking at companies like NIO, Li, Xpeng, Alibaba. These are the major companies that could potentially be affected, but we don't have to worry because these companies can potentially comply. So the majority of the time, the companies that are at risk are going to be the ones that are in small cap and that do not actually follow up or comply with this regulation. So we're talking about companies like Candy, that can potentially have a huge impact on those companies. So you have to be on the lookout for that, for those kind of companies. But the major big ones like Alibaba and NIO, I think they're definitely going to be safer when it comes to this regulation. Of course, they have 3 years to comply, so that's more than enough time for them to adjust their books. And if they have something sketchy going on, they can be able to correct it. So that is really great, bill to that passed. That is going to help a lot of people that are investing in the US, because we had companies like Luckin Coffee that really screwed up a lot of investors. So we don't want that same thing to happen to American investors and some international investors at the same time too. So now let's go over to the other important news catalyst that came out that is going to significantly affect this specific sector. So this sector that we're going to be talking about is going to be the financial sector. So we have the Federal Reserve loosens restrictions on big bank stock buybacks. So this is definitely going to be huge. So I'm going to be going over some top bank stocks that we need to be watching out for that could potentially be going higher and can go to the pre-pandemic levels that they've been trading on. So that's going to be the major target for these stocks. They're still recovering. They're slowly trading higher and higher to the upside. So eventually with this stock buyback, they can go back to the pre-pandemic levels that these stocks have been trading. So that is going to be fantastic for these companies. So we're going to go over to these top stocks. So the first stock that we're going to be talking about is going to be Bank of America. So Bank of America has been trading closer and closer to $30. As you can see over here, it's currently trading at $29.43. And after hours, after that news came out on Friday, this stock eventually went up $1.25 to the upside. So it's closer to $30 and it's up 4.3% to the upside. So of course, these buybacks are fantastic for these companies. They can eventually be able to buy back their own shares, and that is going to provide a very aggressive buying pressure to the upside. So we're going to look at exactly the price target for this company. The stock definitely got beaten down due to the pandemic. As you can see, the stock just sold off to the downside. But of course, the price levels that we can expect the stock to potentially be going is going to be $35. So that's going to be the pre-pandemic level. So the stock could potentially be trading higher and going to $31. And of course, Warren Buffett also is invested in this company. So definitely keep it in your watch list. That's going to be the number one stock that we're going to be looking at. So the second stock is going to be Ally Financial. As you can see over here, the stock's been performing very well. It went back to the pre-pandemic levels of like $32. The stock's been trending higher and higher. Their earnings reports are phenomenal. They've been beating their earnings reports, and this company is definitely solid. I also own shares of both Bank of America and Ally, and this is a company that you need to be watching out for. Of course, now that they have loosened these restrictions, they can definitely do buybacks. But as you can see, after hours, it's only up 0.19 cents to the upside. It's only up 0.57%, but this stock is definitely should be on your watch list. One of the important things when I looked at this specific company is that when these major companies like Bank of America, JP Morgan, once they report their earnings reports, they usually, even if they beat their earnings reports, they still off. But this company definitely outperforms when it comes to when they beat their earnings reports or more positive news comes out. This stock definitely tends to trend higher and higher. And as you can see, we're going to look at exactly other bank stocks too, but this is one of the companies that went back to the pre-pandemic levels by itself, by performing very well, by really beating their earnings reports, by generating revenue, and a lot of investors being attracted by those numbers and getting involved in it. Also, they have a phenomenal savings rate on their bank accounts, so that is why a lot of people also have bank accounts with Ally. So saving accounts with Ally. So now let's talk about the third company. So the third company is going to be JP Morgan. I also own shares of JP Morgan. As you can see over here, the stock also went up 5% in after hours after that news came out, and it's up to $126. So it's definitely going to be a breakout level. It's going to be opening up, and tomorrow in the stock market open around like $126 over here if it can sustain the huge gap up that it's going to have. But of course, the price target for this company, it's going to be the pre-pandemic level. So that is going to be approximately right around over here, around $140, $134. So there's definitely more room for this stock to go higher. Now, these kind of price action moves to the outside is not going to happen right away. You have to just buy and hold them, and they're potentially going to be grinding back to these levels slowly and slowly. So they're not going to buy. They have a lot of floats. They have more than a billion, like 3.5 billion shares available. So even if they do a lot of buybacks, it's definitely going to take them more time for the stocks to potentially be trading to the pre-pandemic level around like $140, $133 area. So but that is going to be the price target in the short term. So if you buy them, it's not going to be not like the NEO or like Tesla or other that hype stocks that we talk about that usually just go up like 10, 20, 15% within one day. So this is going to definitely take some time. It might take them a while for them to, make like 10, 15 or 20% to potentially go back to the pre-pandemic level. So definitely keep it on your watch list. So we talked about Bank of America, Ally, JP Morgan. Now the last stock that's also really phenomenal is going to be Citigroup. Citigroup, as you can see, is also up in after hours 3.53% to the upside. It's up $1.29. It's also going to be edging closer to $40 right around over here. It potentially can break out in the short term. And when you look at the pre-pandemic level that the stock was trading at, it was trading around $47, $47, $45, above $40, of course. So $44 is going to be the price target for this company and the short term. Of course, as I mentioned, just like the other companies, this company definitely has a lot of shares. The float of this company is more than 4.49 billion shares. So even if they do buybacks, it might take them a while for them to hit the $44 area, but it definitely been recovering, flattened down to like $12, and eventually it's been breaking out, $30 area. Had a mini breakout over here at $37, and right now it's sitting at around $37.80. So if you're getting involved in any of these bank companies, definitely hold them for a while, for like a year, maybe hold them for the long term. Some of them also pay dividend paying stocks, and the majority of them I talked about, they pay dividend paying stocks, almost all of them. So definitely holding them, not going to hurt. You're also going to get paid, and also they're going to be appreciating in value also at the same time. So these are going to be the major bank stocks that are going to potentially be moving higher within the next few months, within the next few years to come in the future. So this is the huge catalyst that is going to help them out a lot too. So definitely be on the lookout for that. And of course, with the stimulus package being passed, also with the vaccine news being coming out, watch out for all the stocks that we talked about a few months ago that could potentially double. You got some airline stocks, some other really important sectors like hotels and casino stocks that have been beaten down to the downside that might start to recover higher and higher in the short term. So that is going to definitely be the stocks to be watching out for as we get into 2021. So now let's talk about, what are the important economic reports that we need to be watching out for tomorrow. So for tomorrow, December 21st, we have at 8:30 a.m. we have the Chicago Fed National Activity Index going to be for the period of November. The previous was 0.83. So be on the lookout for that. Economic reports, of course, the major driving force moving forward is going to be that stimulus package being passed. That's going to be phenomenal. And we expect the stock market to potentially be trading higher tomorrow. Also watch out for Tesla, including the S&P 500. We see some more volatility. We might have some continuation in the short term. So definitely be on the lookout for that. And also make sure you manage your risk. And if you have any questions, any comments, make sure you drop in the comment section below. If you want to get 4 free stocks, join the free Discord chat, or support the channel on Patreon. And you can definitely do that too. There's going to be links available in the description box below. But I catch you guys on another video. Have a wonderful day. Let's get it for tomorrow. Peace out.